Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Twist Bioscience Corporation quarterly report. Twist Bioscience Corporation offers a wide range of products and services that cater to various industries and applications. At the core of its offerings are synthetic DNA-based products, including synthetic genes and gene fragments used in product development for therapeutics, diagnostics, chemicals, food, agriculture, data storage, and academic research. The company provides oligo pools for targeted NGS, CRISPR gene editing, mutagenesis experiments, DNA origami, DNA computing, and data storage in DNA. It also offers immunoglobulin G proteins for drug discovery and development. In addition to these products, Twist Bioscience provides a range of NGS tools, including library preparation kits, human exome kits, fixed and custom panels, alliance panels, and methylation detection kits. The company's offerings also include synthetic SARS-CoV-2 RNA reference sequences, synthetic monkeypox controls, and various respiratory viral controls. It provides research panels for the detection of disease in a research setting, such as the Twist Respiratory Virus Panel and the Panviral Research Panel. Furthermore, Twist Bioscience offers precision DNA libraries for antibody engineering, affinity maturation, and humanization, as well as an antibody optimization solution. Overall, Twist Bioscience Corporation provides a comprehensive range of products and services that cater to various industries and applications, including therapeutics, diagnostics, chemicals, food, agriculture, data storage, academic research, and drug discovery. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to drop. The stock price of Twist Bioscience Corp. has dropped significantly over the past year due to various market and industry factors. One possible reason is the company's failure to meet investor expectations in terms of revenue growth and profitability. This could be attributed to increased competition from other biotechnology companies, leading to a decline in market share. Another factor that might have contributed to the drop in stock price is the impact of the COVID-19 pandemic on the biotech industry as a whole. The pandemic has disrupted supply chains, delayed clinical trials, and reduced demand for certain products, affecting Twist Bioscience's revenue streams. Additionally, changes in government regulations or policies can also affect the stock price of biotechnology companies like Twist Bioscience. For instance, shifts in patent laws or changes to reimbursement rates for medical treatments could impact the company's profitability and competitiveness. Lastly, market sentiment and investor confidence can also play a significant role in determining the stock price of Twist Bioscience Corp. If investors become pessimistic about the company's prospects or lose faith in its leadership, it can lead to a decline in stock value. Overall, the drop in Twist Bioscience Corp's stock price over the past year is likely due to a combination of these factors, which have collectively contributed to a decline in investor confidence and market value. Twist Bioscience Corporation maintains a market capitalization of $3 billion, broadly in line with the industry peer group. Twist Bioscience Corporation trades at a higher price-to-book ratio of 6.2 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 26% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a review of various sections in the extracted summaries. Revenue growth is primarily driven by significant increases in revenue from different regions and product lines. In the Americas, revenue grew by 8.7%, while in EMEA, it increased by 35.6%. DNA synthesis and protein solutions also saw substantial growth at 27.7%. Additionally, therapeutics revenue rose by 39% and global supply partners revenue surged by 50%. Furthermore, growth was observed in NGS applications revenue and DNA synthesis and protein solutions revenue. These increases contributed to the overall revenue growth. On the other hand, revenue decline is primarily attributed to a decrease of $2.6 million from related parties. This reduction had a negative impact on the company's revenue. It is worth noting that there are instances where no specific drivers were mentioned for revenue growth or decline. However, in one instance, research and development expenses decreased by 20%, which may have contributed to the lack of explicit drivers for revenue decline. Net income experienced fluctuations over the period under review. Initially, it showed an increase from $0.1 million to $0.3 million on page 25, indicating growth. However, this trend was short-lived as net income declined in subsequent periods. On pages 28 and 30, net loss decreased by $1,087,000 and $1.1 million respectively, suggesting a reduction in losses. Profit margins also underwent changes during the period. Although not explicitly stated on page 25, it is likely that profit margins decreased due to higher stock-based compensation expenses. However, as net loss decreased on pages 28 and 31, profit margins improved. This improvement was attributed to increases in revenues, cost savings through process improvements, and a decrease in research and development expenses. Furthermore, the gross margin increased from 48.3% to 52%, a significant 3.7% rise on page 32. The financial performance of a company can be a crucial indicator of its overall health. In this case, the company's operating cash flow has been a concern. According to the provided information, the company has been generating negative operating cash flow in both years. This trend is not encouraging and suggests that the company may be struggling to manage its finances effectively. Negative operating cash flow can indicate that a company is spending more money than it is generating from its core operations. This can lead to liquidity issues and make it challenging for the company to invest in growth opportunities or pay off debts. The persistence of negative operating cash flow over 2 years raises concerns about the company's ability to generate sufficient cash to meet its financial obligations. It may be necessary for the company to reassess its business model, optimize its operations, and explore ways to improve its cash generation capabilities. The performance of various segments and regions in the given data is a mixed bag. On the positive side, the Americas region showed significant growth, with a revenue increase of $4,672,000 from 2024 to 2025. This represents an impressive 8.7% year-over-year growth. Similarly, the EMEA, Europe, Middle East, and Africa region also performed well, with a substantial jump in revenue from $28,304,000 in 2024 to $38,365,000 in 2025. This marks a notable 35.6% increase over the same period. However, not all regions fared as well. The APAC, Asia-Pacific, region experienced a relatively flat growth rate, with revenue increasing by only $252,000 from 2024 to 2025. This represents a meager 3.7% year-over-year growth, indicating that this region is lagging behind its counterparts in terms of performance. Management's outlook for the company is cautiously optimistic. They believe that their current cash reserves will be sufficient to fund operations for at least another year, indicating stability in the short term. However, they also acknowledge that past results are not indicative of future performance, suggesting a degree of uncertainty. In terms of strategy, management is focused on scaling up the commercial organization and investing in corporate infrastructure. This includes increasing spending on selling, general, and administrative expenses as they continue to invest in their commercial operations. The company's primary uses of capital will remain compensation, manufacturing costs, and overhead expenses for the near future. Management also sees a long-term vision for the company, moving up the value chain from fragments to genes to preps to proteins and beyond. They believe that their products have the potential to improve health and sustainability across multiple industries, enabling a broad range of applications. This suggests a commitment to innovation and growth, even if it means investing in new areas and taking on new challenges. That concludes the financial summary for Twist Bioscience Corporation. Feel free to comment below, and I will be happy to answer them when possible.